Hello, I'm Jessica Amir for the Finance News Network. Joining me from VanEck Australia is Vice President Business Development Damon Gosen. Hi Damon, and welcome to the network.
Hi Jessica, great to be here.
For those that don't know, VanEck is a leading provider of exchange traded products, or as it's known, ETFs. But today we're diving into one of those ETFs. It's called the VanEck Vectors MSCI World Australia Quality ETF. So just give us a quick introduction.
Yeah, so VanEck is one of the largest fund managers globally. We're a US headquartered firm. We have been in business since 1955. We've got about $60 billion funds under management. And as you noted, we are a very large ETF provider. What we focus on is beyond the usual approaches to investment management. And so a great example of that is our VanEck Vectors MSCI World Australia Quality ETF, or QUAL for short, or QUAL is the ASX code. QUAL is a great way of getting exposure to international stocks, but instead of taking just blanket exposure across all of the stocks in the broad market benchmark, it identifies the highest quality companies.
Great. So we all love quality stocks, but how does VanEck define quality?
Yeah, so there's a lot of academic literature on quality, and so typically things like low debt, stable earnings, several other metrics like good, strong cash flow or balance sheets, they're typically associated with quality. The QUAL ETF tracks an index that MSCI runs, and MSCI define quality by companies that have got high returns on equity, stable earnings and low financial leverage.
Wonderful. Now can you give us a little bit more detail about the ETF?
So QUAL invests in 300 high quality companies. The starting point for the index is the MSCI World Australia, which is close to around 1,600 securities. So each of those stocks gets a quality score based on 3 quality factors. The first is looking for companies with high returns on equity. Second is earnings stability. And the third is low financial leverage. So then they're ranked, and the 300 highest quality companies become the constituents of the index. The quality ETF just replicates that index. It owns all 300 securities in that index and the index weights. And the performance of the index has been sensational over time.
And just on performance, as you've alluded to, your fund has done really well. Tell us about that.
Yeah, so QUAL kicked off in Australia in October 2014. Since that time, it's delivered an annualised return after fees of 15.4% per annum. So that's over 3.5 years now. That's around 2% or just shy of 2% per annum outperformance.
And what else can you tell investors?
So for Australian investors in the QUAL ETF, one of the best things about it is the diversification it provides, in that the types of sectors that are really well represented, things like really good quality companies in the tech sector like Apple and Microsoft, in the healthcare sector like Roche and Johnson & Johnson. So the types of exposures that Australian investors don't get exposure to in the Australian market, they're picking up exposure to in this internationally diversified ETF. The second point we'd make is the management cost is very, very low at 0.4% per annum, which is about 1/3 of the price of most active funds. We don't charge any performance fees either.
Very compelling. Now, Damon, tell us about the risk and return characteristics.
Well, obviously the returns have been exceptional since we started the fund, and the long run return of that quality index has been great as well. Typically what we find is in really difficult market environments, you hear of a flight to quality. So with the quality index, it tends to hold up very well in market downturns and actually recover faster because of the sorts of companies that are represented in the portfolio.
And how has the quality index performed during difficult market periods?
During most market downturns, the quality index is outperformed by a sizable margin. During the GFC, the outperformance was around 10%, which was quite a great result for investors during a very difficult period.
And lastly, what's the key message that you'd like to leave with investors?
The QUAL ETF is a very low cost exposure to 300 high quality investments. For Australian investors, it's a great diversifier in the sense of it gives exposure to high quality technology companies and healthcare stocks that Australians just can't own on the ASX. And finally, what we know is that in times of market volatility, astute investors typically are well served by owning companies with strong balance sheets, with diversified earnings streams and very profitable businesses. And that's exactly what the QUAL ETF provides.
Your time's been very valuable. Thank you so much.
Thanks, Jessica.